Gold recently experienced its worst week since June 2013 as investors bet that the Federal Reserve will raise interest rates later this year, boosting the US dollar. Silver has also been losing its shine lately after a strong first part of the year, with the white metal turning volatile in recent weeks. Well, Phil Carr from the Gold and Silver Club is here with me now to discuss all of this. First, let's get stuck in. Welcome.
Thank you.
Let's start with gold, shall we? Because it's not been doing too well.
Yeah, so if we have a look at gold and the correction that we've been in over the last 2 months, historically gold, your average correction, especially after a run-up like we've had this year where gold has increased by over 25%, historically a correction lasts approximately 1 to 3 months. So we're now up to 2 months and roughly just 1 week so far. So in the short term, gold has had one of its worst one-day drops over the last year, certainly. More recently, we broke through key support at 1,300 US dollars per ounce, and we've been finding support at 1,250. We've been sitting on that price for around that level, major support zone, for over a week now. So this is really a very key level for gold moving forward as to whether it will find support here, and if it does find support at this level, we've got the potential for a rotation back towards 1,280 to 1,300 in the short term. There is that retracement potential because it is still quite oversold at the moment, and if it can hold support at 1250, it has the ability to do that. On the flip side, if gold was to break through 1,250, there is a lot of clean air for it to come back down to the 1,200 level, which is the 50% retracement level from the lows of this year up to the highs, which is typically what you see in a correction, that 50% level hit before seeing higher prices. But I do think as we go into November and as we go into the elections, which I'm sure we'll talk about shortly, we could see more of a safe haven demand for gold. So I'm looking very closely at this opportunity at the moment to see if it will be a good longer term buy.
You mentioned the US elections, so let's go from there, shall we?
Sure,
because obviously this week we've got the third and the final debate between Mr. Trump and Hillary Clinton. Now last time Hillary Clinton, she came out triumphant, a lot of people were saying, and therefore it wasn't very good for gold. So if she does so again, which people are thinking that she will, the polls certainly believe that she will, what will be the conclusion for gold?
Yes, I think if Hillary does come out as triumphant, you will see more strength in the US dollar. It will put pressure on the gold market. From a technical point of view in the chart, we saw a very similar price structure before Brexit as well. So we'll have a look at the chart shortly, but essentially the formation in the chart right now is similar in the lead up to Brexit, where we did see the price break down significantly prior to that, and it was obviously a shock result. And we saw a 1,000 point move in 1 day for gold, where we saw it rally significantly, one of the biggest one-day moves in history. So the big question is will there be a shock surprise with this US election? Obviously, if Trump was to win, markets could have some explosive moves. We could see similar moves, maybe even eclipsing Brexit in terms of the volatility and the breakouts that we could see, especially gold. You would expect it to get bid up as a safe haven. When you've got more fear in the market, it creates more volatility. Where there's more volatility, gold is bid up as a safe haven. But of course, on the flip side, if Hillary Clinton was to win, yes, that would be more positive for the US dollar, and you would likely see a breakdown in gold and silver in the short term. Gold, and obviously a positive impact on the US dollar.
And it seems quite sensible, doesn't it? I mean, gold is still up about 20% this year, to just cash in.
Yeah, of course. That is what has happened with a lot of speculators, actually, not so much funds. So funds that have entered into positions at the beginning of this year with gold, especially where they've caught entries around 1,150 to 1,200 US dollars, have continued to stay in those positions. We've not seen a huge change in the commitment of traders and the amount of positions that funds do continue to hold. It has definitely been more speculators that have recently come out of the recent move and correction that we've seen. So the weaker hands in the market that have got in too late, probably a lot of those traders have entered after Brexit. They've caught gold right at the highs of the year and they've suffered. They've been stopped out of positions. That's caused a waterfall effect in the markets, where you've seen very recently gold correct quite significantly. Of course, one of the biggest one-day moves here in almost 2 years. So Right now, funds do continue to hold longer-term positions, and it's something to be mindful of because we could see that as an opportunity later this year on any further corrections to take advantage of a January effect move where you often see a lot of big moves, big inflows at the beginning of January, which we could look out for in 2017.
Okay, moving on, I've got the silver chart up now because we're going to dissect this one and just have a look. You can see October's been really bad.
Yes, over the month of October so far, we've seen that correction at the beginning of the month where we saw quite a significant move lower. So we've corrected now with silver 50% from the highs to the lows of 2016. Silver hasn't continued to break down and follow through at this point. So we've found support just above $17 per ounce. Like gold, it's consolidating at the moment, and we're waiting to see if we're going to get a retracement. So if we will see silver bid back up towards $18.50 per ounce, which could provide a short-term trading opportunity. A break below $17, I certainly think the May lows, which will sit around $16 per ounce, would be a fantastic opportunity to add longer-term positions. In the short term, it's going to be volatile. If we break through underlying support at the moment, we could be in for about another dollar move lower. Any rallies, we need to be mindful that they might be sold into in the short term, so I would look to take advantage on a short-term basis of rallies on gold and silver, and then wait for potential larger corrections at the end of October, beginning of November, positioning for 2017.
Okay, and you don't think we're going to reach that 2-year high again then?
At the moment, I think we've got the potential to, certainly on gold, to revisit 1,300.
I mean silver, but yeah.
Oh, with silver, so I do think we've got the potential to come back up towards $19 per ounce in the short term. By the end of the year, that would take quite a significant move for silver to break back above 21 US dollars, but I would look out for that move in the first quarter of 2017 now. So there is potential for it to do it over January and February.
And Phil, just finish what you were saying about gold before I interrupted you just then.
So with gold, I wouldn't necessarily expect 1,375 US dollars to be breached by the end of this year, but I would look for a revisit of $1,300 by this quarter. But especially the big trading opportunities I'm looking for will be in Q1 of 2017 now, to the upside.
All right, Phil Carr, thank you. From the Gold and Silver Club, talking about gold and silver.